All right. Thank you. Thank you. So glad that Susie and CRV is able to join us today. And first up is going to be CRV. CRV is somebody that we've known for many years, I think almost a decade, right, CRV, when we first met and we did GMASA, which is the global apps and mobile apps. It was the gaming event that we did at the Sheraton. So CRV has sold his company, I believe, last year, and he's going to be talking about that process. I was just going to give you a little bit of an introduction. His full name is Venkatesh, and he's the CEO and co-founder of .com Infoway, and also the co-founder of Megzer, and the co-founder of Tunya Innovation. He's a former president of Rotary Club of Madurai Metro Heritage and the former director of Galata Media Private Limited. So let's give CRV a warm welcome. He's going to do a bit of his presentation, and then I will then invite Susie, and then afterwards we'll do the Q&A. The floor is yours, CRV.
Okay, thanks, Nui. Thanks, Nui, for the wonderful introduction. And good morning, good afternoon, everyone, or good morning, whichever time zone you're in. So, actually, my full name is Venkatesh Chinnakonda Rajendran, but commonly known as CRV. I'm from a city called Madurai, which is in Tamil Nadu in South India. And basically, about me, I'm a mechanical engineer turned into a software entrepreneur. Basically, I started my business, the company .com Infoway in the year 2000 as a web development company. So basically, the team was just around 3 people. Now the company has over 100 employees. So the offerings basically include web and mobile solutions, and more recently, AI ML development. And I have, as Nui said, I have known her for almost a decade, as she mentioned. We did one of the events here called Jimasa in Thailand and Indonesia. Um, so I'm really happy to share about my two exits which I had in my uh, journey as an entrepreneur. So when I started .com Infoway, which is my software company, I also started Galata Media. So which is basically a media company focused on Indian cinema. So basically in India, there are three areas which people love. So one is politics, the second is cricket, and the third is cinema, is entertainment. So basically, we started, we want to do something, and then that's where we started Galata. So it's a media company that Indian cinema is the largest movie industry in the world after Hollywood. So basically, we started it as a news, basically a news website, movie news, movie reviews, etc. And in 2007, we launched a magazine called Galata Cinema, and that became well known in India and globally among Indian communities worldwide. So basically, we built a strong and recognizable brand. Um, we the year we started in 2000, the plan was to actually basically raise money, but the once just when we started, there was this .com crash, which they call the .com bubble, and so everything happened exactly after we started. So it was a very bad luck for us, but in a way it was good because we were basically we were able to manage the growth and fund, and everything happened organically. So basically we were self-funded, and so we did fairly well, and we became a strong and recognizable brand in India and worldwide. And Later in 2015 onwards, we wanted to raise money, and that's when we started speaking to multiple companies. And at that time, but we had a lot of people who were showed interest, and but it didn't work. Um, it didn't actually nothing materialized at that time. People didn't say no, but the deals didn't go through. It was a very different, difficult phase at that time because the user base was over 1 million organically, and we had a lot of traffic to the website, and that means heavy costs. So we needed external funding, and at that time we got an interest from a company, a media company based out of South India. So they showed interest in basically tying up, and what happened in the course of a month is they wanted to acquire us, and then that's how it happened. So in 2017, I got my first exit from Galata Media, and that was uh, actually the deal was like they wanted me to continue for a year, and then basically hand over the operations. So that was my first experience in basically an exit. And the other business that we founded was actually a product called Maxter, which we developed in .com Infoway as a product, and that we started in 2011. So basically, what is Maxter is basically a cross-platform, self-service global digital newsstand with thousands of magazines and newspapers, which people can read through their device. It's like basically a YouTube for magazines and newspapers. So that's a product. This was we started this in the year 2011, and right now we have grown to over 9,000 magazines worldwide with over 5,000 publishers. Um, Here again, we after a year, after we brought in the product was good. We had good basically the market was good, and so that's when we went for a fundraise. We tried, we met a lot of VCs, a lot of them, and some of them basically uh, they said they would be interested, and one fine day we were able to raise the first round, the Series A, which we raised from Kalari Investments, and basically that was 3 million US dollars. So that was the first funding that we received, and that helped us to actually enter the US and European markets. So that was a help that helped us to grow, and later in 3 years later, we actually got our Series B funding, which is 10 million US dollars, and that was a joint investment from SPH, which is based in Singapore Press Holdings, and Kalari Investments. So basically, that was the second investment. Um, so the model was basically a self-service model, and it was the key was it was profitable. Uh, excuse me. So in last year, we got a exit. We were acquired by a company called Verse Innovation. That happened in 2024 in April. So just to tell you how, I mean, it's a long story, but it was actually a 6 month discussion which went on with a lot of due diligence, a lot of agreements, paperwork, etc. Because it was it was a long process, a lot of paperwork involved, a lot of legal compliances, everything had to be done, and so that was my second exit in my career. So that's just about what I've done, and thanks.
Oh. Okay, it would have been good if we knew like those were the extra, so because I think Sky was waiting for you to. Okay, so it was Magser, right? That where you did the fundraising with the 2 rounds. First was 3 million, then the second was like 10+ million with SPG, correct? Okay, all right. So, do you want to? Yep. All right. So, and now our second speaker is Susie. I looked for her. Hi, hello. Finally found her. So grateful. So she is a business leader, entrepreneur, a non-executive director. She's currently the founder and the sole shareholder of Breakthrough Funding. And she is the former executive director at EY in Europe, which is Ernst & Young, Middle East, India, and Africa. So I believe Susie comes with like a wealth of experience in consulting and financial services. That's what it sounds like to me. So now she's going to share with us a little bit of her story. Before Susie gets started, if you guys have any questions, you're welcome to turn on your camera or just do so by your voice when we get to the Q&A section. The alternative way, if you're not in a place where you can open up your camera or your speaker, you can just type it into the meeting group chat and I will read it for you. Okay, so welcome, Susie.
Hi there. Actually, I sold my company to EY, which is why I ended up working for them. I would never work for EY. I'm an entrepreneur. So I built my company from scratch, from nothing. And then after 5 years, sold it to Ernst & Young, as you know, is a multi-billion-pound company. So I'm not going to talk about myself today. If you want to learn about me, you can just look up on LinkedIn. What I want to talk about today is how I did that. And I think that it is possible if you're listening and that you can do that. I've got this thing here called a brand pyramid. So I think that if you've got a new company or a startup, you need to go through this process. And you need to go through this process to be really focused on what you're doing. And that is going to get you to where I got to, I think. So the first rule of business for me is you have to be sustainably profitable. So you might start off with a loss, or you might go really cheap to start with and whatever. But if you can't sustainably make a profit, then your business is not going to survive. So that's where you need to have your head. How am I going to constantly make a profit week in, week out, after that starting thing? And you need a vision and you need a plan. And even if you're starting off, you need an exit strategy. So basically, if you don't have those clearly in place, I think you'll have, this is a UK reference, I think you'll have more success making money by buying a lottery ticket. I'm just going to give some stats. I'm afraid this is from the UK as well. Only 40% of new businesses in the UK are still going after 3 years. And the average lifespan of a company is 8 years. And basically what happens at that point is the owner just gives up because hope and optimism and sheer hard work is simply not enough to start a business. So you can listen to Stephen Bartlett, if you know who he is, as much as you like. They, in my personal opinion, talk rubbish often. It makes great compulsive viewing and it's hugely entertaining, but they overemphasize this chance, personal branding, how AI is your only route to instant business success, and that you can turn $1 into $10,000 in half an hour. Really, I'm sorry, but it's not like that. And I think CRV, Pastry can vouch for that. So I want to just explain how you need to get your vision sorted. And I use this method for a lot of people that I work with. So you need a really clear focus and a really clear vision. And actually, if you're going to make a success, fortune smiles on people who have a cast iron plan. So how do you go about drafting that vision and the plan that sits underneath it? So I've called it a brand pyramid. You need to fill this in yourself, and I'm going to show you how to do this in the next 5 to 10 minutes. So the way to get absolute focus and clarity of purpose is it's a laser point. Nobody else is going to understand what you do, that includes your staff and potential customers, unless you've really pinpointed what it is you're about. So you can take 5 minutes waffling on before I lose interest and zone out. But in all honesty, if you can't explain what you do to your mum or your elderly aunt and they don't know what you do, you're not explaining it well enough. Okay, so you've got to make it really easy for people to understand what it is that you do. So the brand pyramid, in a way, and Pashri is a marketeer, she'll understand this. It's a hierarchy on how you communicate what you do, whether that is to your staff, your customers, your partners, you know, or your investors. So when you're asked what your elevator pitch is, or whatever you describe, you know, what you're going to do, most people start at the bottom of this triangle. That is, they go into detail about their business straight away. And actually, when you're talking to somebody and you're going, I do this and I do that and I do the other, that person is sitting there and they're trying to work out what if what you do is useful to them or not. So there you're talking, and that person then is trying to say, well, does that help me? Does that not help me? And they're trying, they're trying to understand what you're talking about. Basically, what that means, you haven't hooked them in. So they're begging to know more, and they're begging to ask lots of questions. They're trying to work out it, but actually you're just talking. You're on broadcast mode. You're talking. So you're not making a relationship with that person. And if you go on and on about what you do, it's often boring and confusing. So what we need to do is work out what you do in a certain number of words, and then we start having a conversation with that person, a two-sided conversation, so that you're not just on broadcast mode. So I'm going to explain, this is a bit of an odd one. So I run a mini MBA in the UK, and this woman that was on the course had a consulting company, and she manages home improvement or building work. So she liaises with architects, planners, and so on. So if you've bought a new house and you want to add some amazing bit to it, she'll come and sort that out for you. So the first thing is I asked her, what's your core purpose? What is your core purpose, given what you do? So, of course, she went on about, well, I liaise with architects. And I'm like, no. It's not focused enough. What is it that you do? And all of you that are listening, you need to absolutely crunch that down to 4 or 5 or 6 words max. What is it that you do? Okay. So we came up with this thing. Am I allowed to use a swear word, actually? Is that allowed?
This will go on Spotify later. I'm not sure.
I don't care. So her core purpose, I hope this translates, is to stop builders from taking the piss, basically. That is her core purpose. Now, if I went to an event and she told me that, I'd be going, you have to tell me more. You have to tell me more about that, because I've got an aunt, I've got a cousin, I've got somebody who's doing some building work, and they're frightened that they're going to get taken advantage of. So that was her core purpose, right at the top. Stop there. Okay, so that's 6 words. Stop there. You need to work out in 6 words exactly what it is that you do. Okay, could you just show the next slide, please, Sky? So the problem we solve, core purpose, maximum of 7 words. Okay, and I'm going to share this grid with you after this event. If we could go back to the previous slide. The next one, who are your clients? Absolutely, who are you dedicated to serving in your business? So who do you champion? Who do you look after? So for her, when we really came down to it, it was individual homeowners. It wasn't big corporates. It wasn't people doing massive building projects. It was just normal people who've moved into a house and want to do something, you know, good to it. So it was individual homeowners who do not have experience of construction projects. So now she's really focused. That's already, we've only done 2 bits of this triangle, but actually she's there to help protect you from builders and other people because you don't know what's going on. Who does she champion? She absolutely looks after people who are homeowners and have never done this before. So if you can see there, who we champion, it says our clients. Who are the people who have a problem that you are going to elegantly solve? And that's your target market. You can do as much research as you like if that's what you want to do, but actually, who is it? And really focus. And the problem with most marketing is that people do a scattergun approach. I need to do a video on YouTube to 20,000 people, but are they your target market? So be very clear about who they are. And that solves a lot of your marketing problems because you know where to be. You need to be where those people are. And go back to the first slide, please. So she is their champion. She's on their side. She looks out for them. Almost everyone she talks to has been in this situation or knows somebody in this situation. We haven't even talked yet about what she actually does. She's just saying what she can help you with and whether you're her target market. Now, already for me, I want to know more. I want to know more about this person. So the next one on this slide is, do you have a business analogy? Do you have a business analogy that you can use as a substitute because somebody already knows what you're talking about and go, you're that sort of person. Now, in the UK, we have a guy called Martin Lewis, and he is a champion to explain finance and mortgage payments and what the best deals are and whatever. And everybody in the UK knows him. So we decided that she was, this guy, his name, Martin Lewis, she was the Martin Lewis of construction projects. And people in the UK would go, I know what you do now. I was talking to somebody yesterday and I was saying, come on, what is it that you do? What is it that you do? And she has a domiciliary care company where her carers go in and help elderly people in their homes. And I was saying, what are you? And she is like the AA or the RAC. So in the UK, if your car breaks down, you ring them up and they rush along and they come and help you. I said, you are the AA of the care industry. And everybody goes, right, I know what that is. So can you find a business analogy that people you know who you're trying to sell to will go, I get that. So have a really good think about that. The next thing, still haven't talked about what you do. The next thing is your brand personality. You need to ooze this. So you need to use 4 or 5 words. Is your company friendly, helpful, collaborative, funny? What is it that is your brand personality? Because as soon as you get another person on board, you want them to be a mini you. So the brand is really important. Tell us 5 things that you want to do all the time. And somebody has their microphone on. So don't use, things that other people use, professional. Look, we're all professional, but bring out what is very unique to you, your brand personality. Can we go to the second slide again, Sky? So you can see here as we're going down, we've got core purpose, who we champion, compare your business to another one in a different sector. That's business analogy. Brand personality, 4 words that describe you. And you're already getting a really good feel about your company and what you're doing. So the next one is uniqueness. Again, if we can go back to the first slide, please. This is a classic marketing thing. Uniqueness, what is your differentiator from the competition? What sets you apart? And please don't say, we're different from everyone else, but actually everyone else in your sector says that. So really look at what is it that makes you special. Now, her, as a building consultant, her differentiator was everything is completely transparent. That's my differentiator. I'll share the budgets, I'll share, what this is happening, how this is happening. Everything you see is transparent. Whereas everybody else in her sector, it's all, secret and hidden. And then all of a sudden you finish a building project and you get a massive bill that you weren't expecting. So for her differentiator was being completely transparent. What is yours? What is yours? You've got to really think about how you stand out. So once you've sort of really got this in your head, and you need to spend hours and days thinking about this because you can't be successful unless you've really got this nailed. What is the key client benefit that they can expect from you? So again, if I go back to her, the key benefit was financial control, peace of mind, actually a better understanding of the whole process. So that is what she's selling. That is the key benefit. And what I do see, and I'm sure CRV will back this up, I see a lot of people in the tech space who do amazing bits of technology, but actually the key client benefit isn't massive. It's just really exciting. It's really interesting, but I'm not sure how I'm going to use it. I'm not sure how it's going to make my life better. So, really hone in on what is the key client benefit. What would your ideal feedback be? So on Google or whatever it might be, what would a client who was really happy with you ideally say? Because this is what you're getting your staff to work towards. This is what you're getting to work towards. And hers was, I'm just going to read this out. Her ideal feedback would be overruns and additional unexpected costs seem to be an acceptable part of the building refurbishment process. But with this company, it's not. There are no surprises. And that is what she's aiming for. And then finally, her service or product. Now, once you've had a really great conversation with somebody, and this is a real two-way conversation, let's go, okay, so what is it that you actually do? Well, okay, I do procurement, I do construction cost control, I'll liaise with the architects, I'll do this, I'll do that, I'll do the other. And that person by this point is begging to find out what you do because they want to be your client. So I can put this, I don't know how you want to do this, Pashri, I can put this on there, but it's a really good process to go through this, even actually if you're a couple of years in, just to make sure you're still, absolutely focused. And I think what's happened with, I've seen it time and time again in our mini MBA that we do, the people who go through this thing actually become really focused. They cut out a lot of cost that isn't necessary because they're doing things that isn't mainstream to their business. And I'm sure I don't need to point out to you the power of using this vision and keeping this. You should put it on your wall, you should put it on your desk, making sure you stick to it and stick to it and stick to it. Now, within weeks, and this has happened to loads of people who have been on my courses, within weeks, she actually began to win more work. Her costs were better under control and her profits accelerated. I'm not exaggerating. It's because of the clarity that she had. So please spend time thinking about this. I promise you it will bring results because you'll be really focused. I'm sure Pashri will let you know how we can get this out to you. That's it.
Thank you. This is what I also do in a workshop.
It's really important, isn't it? Because so many people go out business and they've got a sort of woolly idea of what they do, whereas actually you've got to be laser focused. And sometimes you need to get help from somebody like Pashri or whatever to help you really get it straight in your head.
Yeah, because we do have, I just the other day I mentioned to somebody the book about the E-Myth. Most entrepreneurs at some point in their journey would have come across this book, the E-Myth, whether you're the business owner or the technician, right? And are you gonna stay inside the business, like work in the business or work on the business? And I think what you're pointing out is that pyramid that it's like working on the business, because sometimes what you have is, I would say what I've noticed in my own experience is 60 to 70% of the people who come into entrepreneurship, they're a technician. I was also a technician, and I'm still in between the technician and the business owner, but slowly I'm graduating out of being the technician, but there are certain aspects of my business that require me to
You've really nailed what your business does. You've really nailed the brand. It means that the person who starts to come on and work with you, then you make sure they're imbued with your values and what you're trying to do. So many people sit in a job and go, I don't really know what I'm supposed to be doing, but I'll just, do this thing here. And then what you need to do, Pashri, absolutely right. You're a doer, and then you're a manager, and then you're a leader. And by the time you get to be a leader, you don't do the tech stuff anymore. You've got a load of other people doing it. You've got to find a way of moving up that ladder.
I've learned from my mistakes, Susie. We have an orientation and an indoctrination document that only started as 20 slides. This is what the first 24, 48 hours of somebody coming to us, that's all they're doing is we're going through the slides, we're explaining, we're sharing the softwares, we're explaining the different things we do in terms of the process. But we start with our core value. What's our purpose? Yeah, I think that's really good. And it's funny because so many entrepreneurs come in as a technician. Let's say they were, a software engineer. And as a software engineer, they decided to have an agency to be an app developer, right? So then they're stuck in the technician mode of just doing that service, but not working on the business to really
And that's
clearly
why
define.
that pyramid is so useful, because it makes you think about the business, not about yourself, and about succession, and how do I get people who come underneath me and I move up. So for me, we had, in the end, we had 25 staff, but we were doing £1 million in profit, net profit, because those people were so supercharged and they just knew what they were doing. They were really excited. And that's where you need to be.
Yeah, because I think the more people can get engaged with what is the goal, yeah, the better that I think the higher the chance for the brand to survive, or the business and the brand to survive for the long term. All right, so that was a great presentation. I just want to remind everybody that we have, if it's up to you if you want to ask questions directly, or if you want to type your questions into the chat, and I will read it out to Susie and CRV. But in the meantime, I do have some of my questions. So I'm just gonna run through them, and as you feel free to raise your hand and let me know if you want to verbally or using video to answer the question, or just type in the chat, right? So my first question to the both of you are, what are the financial metrics matters most to buyers when assessing a business for acquisition?
Oh, let's see RV start. He sold more companies than I have.
CRV, were you able to hear me?
Yeah. I just was on mute actually. Okay.
Oh,
Yeah. So basically, I think the important factors, the metrics where people look at is first thing is the revenue. So the total revenue which is generated by the company, and also the revenue growth. So what is the growth percentage over next year and year on year, etc. That's the first thing. So the revenue is very critical because that's the most first important thing anybody looks for. Second is the profitability. So basically, there are a lot of unicorns. At least I know there are so many unicorns in India itself that are valued at billions of dollars, and most of them are not profitable. So it's a very interesting situation. So Paytm is one of the largest unicorns, and they've been valued at I think at 20 billion or 25 billion, but they are bleeding. So that's a very different scenario. But normally, if you say its profitability is very important, that's what people look at. So the gross profit, the operating profit, net profit, all these factors are what they see. The third factor is basically the cash flow. So basically, if the cash flow is good, is strong, they look at it. There is an additional weightage for it. And then the next is about the debts. So basically, if a company is having debt heavy, like if they've got a lot of borrowings they have taken, that is a factor which they consider. And what is the return on investments which are being projected? If they invest, what is the return on investment, and what is the earliest they can exit that business? So that's another factor which they look into. The other factor is about the customer base. So basically, how many customers? What is the customers? What is the spread? The you would say, like, if they are global company, are they dependent on any particular market? And what is their long-term, say, customer lifetime value is one important thing. Like it could be customers who are there working only for a particular order, or there could be a recurring business from them over a period of time. What is the retention? So basically, customers, you have customers, but they work with you once and they go away. Why? What is the reason? Are they sticking on to you? Is the retention good? And then the valuation is very important. So basically, PE ratio, which they say, is one of the factors they consider. And there are other factors which are basically like industry specific. So, like, is there a chance that there will be a particular a shift in things? See, for example, certain businesses which were which were the leading ones are now totally out because of the emergence of AI. Like, for example, content development was one of the it was a very good income stream for many companies, but after AI came, and that's like almost vanished. In fact, in I would say, like, I was actually, my budget for content development every month was around $2,000 to $3,000, and now it has become only like, say, $50 thanks to ChatGPT. And we get I mean, the results are tremendous. So these are basically the factors. So I hope that answers your question, Nui.
I think
Wow, that was a
from
lot.
my yeah, from my point of view, it's like selling a car, really. You can put whatever valuation you want, but it's only worth what anybody's prepared to pay for it. And I think that one of the things I learned from selling my companies is different types of buyers. So that's why you need to understand your exit strategy. Are you going to sell to a competitor? Are you going to sell to somebody who's only interested in the money that you're making, the profit that you're making? You know, what type of person do you think you're likely to sell to? If you're a tech person and you've got amazing intellectual property rights, and you've come up with something really technically incredible, it may be that you never have to make a profit, but there's not many of those, honestly. And would a competitor buy that? Would they buy your technology because it would take them far too long to develop it themselves? Then maybe you can get bought on that basis. Most people, if they're in your sector and are trying to grow by acquisition, they might just want your clients and be prepared to pay for that because they just want to grow. You'll still need to be profitable, but they wanna be bigger in the sector. And then there are buyers who can see something that's highly profitable and they're quite happy to sit with a company that's making a great profit every year for them. So depends who the buyer is, but without a doubt, 99 times out of 100, it's making sure that your net profit that's what people are after. I do think that turnover is vanity, as they say. Turnover is only worth it if the profit's really good. So I'd rather be turning over, £2.5 million and making £1 million net profit than turning over £15 million and making £1 million net profit. I know which one I would buy. So really focus on the profit.
Mhm. So you guys gave me a lot of different metrics. I want to look at the opposite side of this. What are some of the red flags that might deter a buyer from buying your business? What do you think, like, if somebody is thinking for the long term and, needing to sell the business, what do they got to firm up so that, like you said, what's the best part of this car? Is it the engine? Is it the paint? Is it the mileage? Yeah.
So when you do due diligence, somebody's going to look under the bonnet at everything. Everything. They're going to look at every single thing you have, every contract you have, every subcontractor you use, all your staff, la la la. If you try and hide stuff when you're trying to sell things, as soon as somebody smells a rat that you're not saying that you're doing what you should be doing, they'll just run away. So think about, what would a buyer think if I make this decision? So for me, a red flag is anything where people are hiding stuff under the carpet. Then the sale's just not going to go ahead.
How about you, CRV?
Yeah, so I see. If you ask me, I think I would some important factors is basically I would like to understand about the particular management. Who are the people behind that? Are they fully committed? Are they basically strong to make the company grow? Will they be able to assist when they acquire it? Will they be with the company, or they just like looking to sell off and go run away? So basically, that's very important in terms of the people behind the show. So that's very important. Uh, is there any threat to the business? Basically, again, as I mentioned, is there any like a disruption which could happen, which could actually offset that particular, which would actually be against that business? So that is one thing they would look at. But basically, the most important factors is the revenue, and is it basically if like compared to last year, has the growth been better, or is it actually declining? Same for the profit as well. And again, as I mentioned, the plus is again here the minus. So if there is a lot of debt, then again it's a problem. There will be a red flag. And as Susie said, if there is any hidden things which are not which have been basically hidden. So these come out in due diligence. So basically, due diligence takes place. So sometimes almost for starting from a month to even a year. And is the business dependent on few customers, or is there a chance that they could actually have a bigger market share? Um, and is there any basically any technically any issues? So basically, like when if the company is based in the US and the company which they're looking to acquire is in India, is there going to be any tax issues? Is there going to be any problems in actually legal compliances? All these are critical things which they look at.
I think just to add to CRV, I think people are really interested in your trajectory. Is this going up? And then can I take advantage of that? And I think we've got a question, if that's okay, in the group.
Yep. Yeah, Yvette
It's
asked.
about, when's the right time to sell? What's your motivation? Blah blah blah. And I think the thing for me, getting the right amount of money, is just getting that timing right, where your growth is looking amazing, but that you can't scale anymore in the way that you are without a load of investment, or whatever it might be. So if you can hit that growth thing right at the top, that's really helpful. And Yvette's just ask a question about what was your motivation in selling the business? I set my business up to sell it. That's what I did. And I think I found it much easier because every decision I made was, is that going to look good to a buyer? Is that going to help me get the most profit, the most turnover, blah, blah, blah. And therefore that was that. How do you find buyers? Basically, most of us use a business broker. I hate them, but if they're like estate agents, they go out and find people who'll buy your business. And often they will take between 3 and 5% of the final sale price. That's what happens in the UK. But they will go out and market your business. They'll find buyers and conduct that, because often you want it to be completely confidential, because you don't want to spook your staff. And so that's what you would normally do. Just Google business agents and then get some references, see if they're good, see if they've used other people. Don't know what you think, CRV.
CRV, did you also put your business up for sale? Was that the intention from the start, like Susie's?
So in both cases, both businesses, I didn't start off with an intention to sell at all. In terms of Galata, I wanted to be the leading market, basically a number one in the marketplace. But going forward, there was again we couldn't grow and we needed money, so we thought we would raise money at that time. But then we actually found a person who wanted to acquire us. So it just happened that way. And it's very funny because actually we had a broker in place, and we ended up paying him, but the deal was done directly. So it was not through that agent. But since we had him in the as a, we had signed him up, we couldn't go without we couldn't go directly.
Oh, okay. So that's interesting. So you ended up not working with a broker, correct?
Yeah, we had signed up with him, so we had to pay the broker, but the
Oh,
deal was the company was direct contact.
oh, okay. So
So
it didn't even come through that person, but you still had to give them a commission?
That's right.
Oh,
my
interesting.
business broker was really, really good. And what they did is they proactively sold my business confidentially, marketed my business to all of my competitors, other people who they already had a list of people who are actively looking for buying in the UK. And you need somebody who's that. Anybody can just, publish your business on a website. That's not what you want. You want a broker who will be proactive and really sit with you, really understand your business, and then go out and actively find buyers for you. There's not many good ones, but
Okay.
you can look for them.
I think I'm gonna, if no one else has any other questions to put into the chat, I'm just gonna ask this question about what factors should a business owner consider when choosing the most suitable exit strategy?
Basically, the most suitable exit strategy is when it's right for you. So
How
you'll
did
know.
you choose that one that was right for you? Though you said, I don't know if Ernest EY asked you to stay on a year like CRV did as part of the transition.
Yeah, so basically, again, this is what happens in the UK. And I don't know if this is global, but you'll never get 100% of your business on when you sell it on day one. Nobody will do that here. Basically, what they'll do is you can get between 50 or 70% on the day that you sign on the dotted line, because they'll want to check out a load of other things to make sure that it's all running smoothly and it was all as you said it was. They'll often then say you have an earn-out, which means that you have to stay on for 2 years or 3 years. Don't ever stay on for 3 years. It'll just be awful. If you say, I don't want to stay on, then that will reduce the price for sure. I didn't want to stay on in my business because I wasn't running my business. I'd managed to get myself from the doing to managing to leading. The best advice I was ever given is you should be only working 2 days a week in the business by the time you sell it, because you have to prove that it can run without you.
Yeah.
You have to prove all the systems and all the things are so good, it actually doesn't need you. So when I saw the business, like, well, I'm not going to run the business because somebody else is doing that. I don't even know what's going on anymore, really. So I just did a consultancy contract for 2 years and did the rest of my payments, 15% and 15%, like that. The problem with doing an earn out, I've never met anybody who's been happy with it, is when somebody else owns your company and they're asking you to stay on, you're not making the decisions. They're telling
Yeah.
you what to do. We're entrepreneurs. We're entrepreneurs because we don't like being told what to do. And also, if somebody's holding you to make certain profit figures, you're not in charge of anything. So they might have added a load of cost, or they might have done other things, and it's out of your control about what you can do. So earnouts are really difficult, in my opinion, because people are so excited about selling, they don't realize they can dictate a bit about what that would look like and what it means. So I was very clear. I didn't want to work in the business, but I was happy to work for EY for 2 years, although that was a struggle, but I did it.
How about you, CRV? Do you have another point of view about what is a suitable exit strategy for a founder or an entrepreneur? You're muted. Unmute. Yeah.
I think it's actually the terms of the deal. If there is a good deal, you should take it, and also consider the market environment. Is it a bad market? Because right now, with all things going on, Trump going in all firing on all cylinders, market is not in a good position, and the number of investments have actually dried down. It's basically not as so. If today, if there is a even a better, if it's a lower valuation, and if you're able to get a buyer, and if you're looking at it, you should consider. Otherwise, we should be prepared to wait. And there are other factors also. Basically, for example, as Susie said, whether they want you to be with the company for a longer period of time, or is that thing like negotiable? And again, the terms of is it only cash, or is it a cash stock swap? Because a lot of deals are happening where they actually give you only a percentage in cash, and they give stocks of the other of the parent company, and which you are supposed to sell only when the company goes public. So there are a lot of different clauses, or they would say you have to the vesting period would be after 2 years. So you need to be with the company, and they can sell the shares only after 2 years. So your money will come only the full money will come only after 2 years. So there
Go
are a
for
lot of
cash.
these factors.
Go for cash. Well, and I say that because, like COVID could hit, or, it's so, you've worked so hard to get it to that point. The more certainty you can get, the better. And you must get yourself a good lawyer who will do the transaction with you and explain everything, because you've got to understand exactly what it is you're signing up for, and be comfortable with it. And everybody's got different levels of, comfort. So I think CRV is exactly right.
I mean, definitely I would go for cash only. I think everyone would love to do that. There is no second thought. But actually, in my case, the first deal with Kalata was both of it's a cash plus stock swap, but it was very interesting. It actually gave a better value when I was able to sell it. So I think it just
Depends.
depends on the situation. It just
Yeah.
depends on situation and what pressure you are in actually at that executing the contract, whether you really want to sell it at that time, or you're prepared to wait for a better time or a better price or a better buyer as well. Because uh, I mean, every investor is in it has got a different thinking strategy. So I mean, I always say once you have raised money, you are their servant. So basically, your employees, your everything happens only
And
with their
Patrick
approval.
and CRV, can you
So
imagine anybody employing me? I mean, it was not going to work. So for me personally, it was like, no, I know that's not going to work. So it depends. As I was just saying, it depends what suits you, what position you're in.
All right.
that's right.
And with that, if anyone have more of a private question, if you want to ask Susie or CRV, they have already included their LinkedIn in the chat. So feel free to ask, to connect with them. Because I understand, buying and selling businesses, it could be a sensitive subject, and maybe those who are listening. And I've noticed we had like very low drop rates. So I think people are very keen on the subject, and they may have other questions that they like to ask. And Dipti says, thank you for the knowledgeable session. And she gains so much. And thank you, Brenna, for organizing. Yes, Dipti. Dipti is also my collaborator on North Star now. Oh, she loves and you added the pyramid worksheet. Oh, excellent. So anybody
Awesome.
who wants to work that out and don't have to pay us a few $1,000s to do it, here you are, you get a free mini MBA from Miss Susie. Can we just touch on the events against Sky? So we're gonna run a speed networking towards the end of April because it's our New Year's month and many people will be traveling. So hopefully we can see everybody at the end of April for a speed networking, which will be done for charity. Next, please. We have Mr. Sky doing our first webinar. So proud of him, stepping up. And he's been going, by the way, to Toastmasters with Dipti. Oh, you don't see the slides. Oh, how come? I don't know why.
We can see it.
Oh, okay, I can see it. How about you, Susie? Can you see the slides?
Yep.
So Sky, he's come a long way, and he's become a marketing manager for a brand now, and he is going to be talking about social media planning, some tips and trends, and how to do it based on how we manage this for our clients. Next, please. We also have navigating the 2030 horizon. This is going to be if you are doing any business with companies in the EU and the kind of things that you are going to be responsible for in the space of ESG and SDG, because this will be part of the policy and compliance that will be required. So we have Jamie and Thomas coming in as our speaker on that subject. Next, please. We have North Star now, which is going to be on the 17th of May. This is a in-person mastermind meeting. This is a mixed one, including both males and females, and it's going to be at the Carlton on Sukhumvit. So please save the date. The theme on this is going to be money and entrepreneurship, that kind of like falling in line with this talk, right? After, how do you buy, how do you sell your business? So yes, thank you so much, Susie and CRV and everyone who's joined us. And when this file has finished, we will share it online for others who weren't able to make it today. Thank you, Yvette, for coming. Thank you, everybody. So Anil and Ken and everyone else who's in the chat. You guys have a great afternoon. สวัสดีค่ะ
Cup and cup.
ครับ สวัสดีครับ